Well, for more on China's ambitious plan, I'm joined live from Seattle by Gary Rieschel, founder and managing partner at Qiming Venture Partners. Thank you for joining us.
My pleasure.
So what kind of changes are you seeing in the perceptions of made in China products?
So the biggest change has been actually within China itself. The Chinese consumer has become increasingly demanding, so that you see whether it's fashion design, consumer electronics, the quality of those products has increased dramatically over the last 10 or 15 years. It takes longer for those brands to establish themselves overseas. It took Panasonic and Sony 20 or 30 years to establish themselves from Japan and the US. It took another 20 years for LG and Samsung to establish themselves overseas. But the advantage that the Chinese brands have is a huge domestic market and a very demanding consumer base. So just an average product no longer sells in China.
So you mentioned the pace of progress, but what's your take on China's ambitions to really renovate the manufacturing sector and modernize its technology sectors with the Made in China 2025 strategy?
The Made in China 2025 strategy is really it's an extension of 30 years of policy. So you had the 863 policy back in the 1980s, followed by the 963 policy in the 90s. But the big difference here is that it used to be China would look overseas for technology to license in, technology transfer and source from overseas. Now it's actually investing in domestic technology on its own behalf, on behalf of its own entrepreneurs. And that's the really significant difference between what the Made in China 2025 initiative looks like compared to prior policies.
And in terms of how significant this policy is to China's overall economic rebalancing, what's your take on that?
I think it's very significant. China's at the point where it still needs to establish a very large number of manufacturing jobs, more and more middle income jobs in services and manufacturing. And it needs to balance that against the fact that it still needs to source technology from overseas. A great example is healthcare. China is now the world's largest disease population for most forms of cancer, for diabetes, and for many other diseases. It can't afford to wait for the benefit of its own people to have everything made in China. So there's going to be pockets where it needs to aggressively work to bring technology into China. But it's also at the point where the entrepreneurs in China, the capital base in China, the market dynamics in China really reward the domestic investment as well.
Now, we also saw that China is really encouraging foreign investors to get in on the action with China's Made in 2025 plan. What sort of opportunities do you see for them?
Well, I think it's going to depend sector by sector. So as we mentioned, healthcare, environmental sciences, clearly opportunities for foreign technology to come in and participate in that. If you're an enterprise software provider, probably not as much of an opportunity, since I think China is rather frustrated with the fact that most of its large IT infrastructure has been based on foreign technology, and you see significant moves away from that. So I think if you look at telecoms, probably more limited than healthcare. The EV, electric vehicle, autonomous vehicle area is one where they already have significant leads in some areas, so I think foreign firms would struggle to be involved there. So I think it's going to depend case by case. There are clearly huge opportunities to participate given the scale of the market in China and given the scale of their ambitions, if you will, in manufacturing. I think the real challenge on Made in China 2025 is not so much for the foreign firms in China. It's for the implications as those firms start to compete with the Chinese firms overseas, and they realize that those firms, if you don't compete in China, you really can't understand what you're going to be competing with outside of China.
Now, Gary, I do quickly want to get to the China's Made in 2025 plan. We saw that a lot of the sectors in there, whether it was aerospace or new vehicles, were targeted by US tariffs. So what do you think the impact is going to be both for Chinese companies and US companies in this space?
So I think on the tariffs, my personal opinion is that we're going to wind up not seeing much happen. I think that there'll be some accommodation on that. I think that the tariffs really from the U.S. side are looking back and not looking forward. And I think if the government here was more thoughtful, they would be looking at opening up more and more of the services industry for financial services, legal services, and so on. So I actually think that there'll be quite a bit of noise in the short term, but really not a great deal of impact over the long term.
All right, well, thank you so much. Gary Rieschel there, founder and managing partner at Qiming Venture Partners.